We change over to another trade we took here. This was my best one of the month so far. Not that I netted, but that it ran. Um, Another thing I'll say on that one too. So on that Apple day, I coupled that with SPY calls, mostly because, as I mean, a lot of you know, I think Apple's weighted at like 6.5% of the S&P. So usually on days they don't exactly run like directly, but on a day like that with Apple so bullish, I was just expecting to see the markets kind of tailing off that and buying up everything and coupled with that. Plus, with Apple ripping like that, it's going to pull a lot of the S&P weight itself. So I coupled this with SPY calls on that day. They both went over a bag. I say I netted 452 calls for 250% that day as well because it was a Monday, so I took dailies. Then moving on here to last Friday, I know a lot of you banked on this one. We played the downtrend. Always got to play both leads here. So let me zoom in here. This was last Friday. Let me zoom out here so you guys can see what levels I have on here too, just so you can see where all these fibs are coming from. One of these is outdated. As you can see, this one's not even in play anymore, but I had this was back when this was the previous high SPY. So those aren't in play. The ones I do have in play here that you guys will be seeing on my chart are a uptrend here from this was the Fed speech. This one doesn't look accurate on the daily, but if I go in on the 5-minute, there is a little candle that filled there. This is the uptrend from after the Fed speech, again, that we just showed on Apple. And then I had this going down to, this was the previous support. Obviously now we're under that. But I'm mostly playing these major levels from the uptrend because we're still in that reversal. So as you can see, today actually we closed right at the 50. So it would be interesting how this continues out. But if I go back in here to last Friday, this was almost, if I can put this into terms that you guys all use, this was almost like an anti-morning flush. We got a very bullish open here. So we opened, why can't I see what day it is? This thing's all messed up. There's Friday. So we opened above whatever fib level I had going here. This really wasn't important, but we ran to the 50 fib I have here. If I can move this, right at like 140, 150 is where we peaked out. So I never trade in the first 5 minutes, as you guys know, but I kind of sat here watching, and on that rejection, very strong rejection, we broke the 8 EMA and the 821 there, as you can see. So right as these all crossed over and we broke through every EMA I have here on the 5-minute, this is when I jumped in. I took 449 puts. These were dailies. It was Friday. So as we were just talking about with EMAs, I was going to see either this 8 EMA was literally right at this fib level I have here. So this was either going to act as support and continue bullishly, or seeing the break here, this was where I got the trend that I saw for the day. And then as you can see on the way down, it pretty much acted as resistance for the entire leg down. Like especially here, we're getting some consolidation here. Second it touched, reject all the way down again. So right around like 9:45, I probably jumped in 449 puts here. And exactly the same one on the opposite side. I was going to use the 8 EMA as my telltale sign here. If we had broken through that and tested the 21, I would have scaled some profits out. I was also reading the levels here. But I mean, as you can see, we didn't even test the 8 EMA. Like the second it hit it, we had a fat candle down every time. So I just let these ride all the way to this consolidation here. I scaled most out. I think I was out 3/4 by the time we got to this consolidation here. I left runners. And then the second I saw this level break here, the consolidation level, once the support there broke, I then jumped in 448 puts, again, chasing out of the money to try and get the most volatility. And I rode those all the way down into here, which, no, okay, I'm opposite here. This consolidation is where I scaled out. I was going to say something's off here. I probably scaled here at this consolidation, probably half. I scaled out half here, plus almost 130%. So this must have been my first scale out on the dailies. I left half run. And then I took another quarter down here once we saw this consolidation, probably somewhere down in here. Um, and then once we pulled up, so I always left a runner, and I figured worst case scenario, I'm losing on my green trade, but it's always worth the risk in my opinion, because you can get something like this that then banks the runners that you leave. So I left a quarter to run, broke the ADMA here. This is probably where I was out. Crossed the 21, crossed the 50 here. So this is where, if anything, I'm thinking calls. Once we're back above the 50, I didn't take them, but this is where I would have been thinking calls, buyback, bulls are getting the better of the bears. But I mean, as you can see, the bull run here absolutely rejected. Once we crossed over again here, back under all the EMAs, I jumped back in 448 puts, which this makes more sense because we're out of the money. So now I'm holding a quarter of my 449, and I jumped in 448s right here. And the exact same trend conformed in the PM as we had in the AM, just absolutely rode the ADMA all the way down. So I scaled out along the way. I think I kept it. I closed the quarter out of my 448s right before close down here, and I took the last of my quarter, my 449s down here. So I netted 196 and 163 on those respectively. At peak here, the 449s went over 10 bags though. So that was one of the better trades. I know you guys all pretty much banked on those, and that's how I played that. I wasn't really looking at this like macro level, which I know a lot of you guys, like I get DMs asking like, what's the market's going to do? What's the market's going to do coming up? But as someone who plays dailies a lot on these indexes, it almost behooves you to not think of it like that, because then you start jumping into positions that aren't exactly conforming just because your brain is telling you that like, this is what I think it's going to do macro level. But I just play what it gives me. So that's what I saw it open. We rejected it open. It was looking very bearish. As you can see, we were in a fat sell-off all the days previously. So, I mean, it pretty much did exactly what we had the day before. You see a bullish open, you get some dip buying, and then ultimately another rejection. So I was just continuing that trend into the end of the week. That's how I played that. I wish to also show you guys while I'm sharing my screen. I also get asked how I scan in the morning, and I think I went over this when we did the live call. I don't do anything special. I know a lot of guys have oh, look at that. I changed my account name and it's all gone. But I have this watch list I run here. Pretty much every stock I've ever played, I throw in here just to keep eyes on it. And it's not here right now, but Thinkorswim does a sizzle index that I love that tracks option flow, percent movement, all that. If not, I'm pretty sure everything has like volatility indexes. You can look at it even just like a simple like mark percent change. That'll track like overnight movement. Just see what's getting the volume, where the money's flowing before market. I don't do anything special with like TA and indicators and all that stuff. That's pretty much how I play that. And then once you get some names that looks like they're getting volume moving into the open, then go into your charts and see where your levels are at for the day. See if you're above a level where you would get a morning flush into a bounce. See if you're under a level where you get a bullish open into a reversal like we had here on SPY. Anything like that. The biggest thing is just having your levels, having an idea on how to play each name both ways, because you're never going to be successful like guessing. You just got to play what it gives you and see how it plays between your levels. This is another thing too, and I know I'm a freak with these. Diamond doesn't have exactly this many levels on his charts, but this is one of the biggest things. So like a lot of times you're not going to like, I didn't have any fib level at this support. All these different levels, especially when we're in a retracement here from previous prices we've been at before, having these levels are like so crucial to me, because a lot of times you'll miss it if you don't have them marked out in your graph. But I would say like 8 out of these 10 price levels I have on here were previous highs or previous supports from dips back when we were at this level probably a month ago. So if I don't have it, if I find support like this consolidation, if I didn't have anything under there, I'm just clicking on my tool and throwing in a price line here. If not, I mean, you can throw a trend line in if you don't have that on your charting platform, whatever you want to use, but you just have to mark out these random levels, maybe not as much so as I do, but even if you just go to the daily and just mark out like significant prices, mark out closes, mark out opens, look for gaps as we do. As you can see, this is what I played today. This was an unfilled gap down that we had we had a very, I forget when it was. It might have been after the Fed talk. We had a huge gap up over the weekend, I believe. So this was an unfilled gap down on the way down here. We hadn't tested this before. So as you can see on Friday, this is actually where we fell to. Then Monday here, we acted as some support. We got some bounce. We dropped down to the 50 level of this gap down. Huge bull surge into power hour yesterday. Then today, you can see we got a bounce here right at the top. We ran to the 25, we ran to the 50, we ran to the 75, and then we completed the gap down. So these are also another big one. If you go into your dailies, mark these out too, because gap fills are always important levels to play between.